Hey traders, in this video I'm going to show you how to find good, clear, easy to see entries and at the same time to take advantage of my side-by-side strategy. Without further ado, let's dive into it. Alright, here you see the Brent crude oil. This is actually a video I wanted to record for my students, but I'm sharing this on my YouTube channel as well. On one side I have the 2-minute chart of the Brent crude and on the other side I have the 3-minute. The reason why I have this is because sometimes you can have a little bit of cluttered signal. You can see here that the 2-minute chart shows that the price goes up and down through the 200 moving averages as well as underneath it. And if you look at the 3-minute, you can see that the respect from whenever it goes down is much clearer here. You can see as soon as the price goes over, it immediately gets put down underneath the 200 moving average. So thereby you're actually giving a really good signal here when price respects the 200 moving average and is in a decline. Second of all, you can also see here that even underneath the 20 moving average, you have 4 candles, all of them closing underneath not only the 20 but also the 200 moving average. So kind of what's left to do is like Oliver teaches about the Fabulous 4 technique, where you can say, well, I will put a Fabulous 4 box around the last price action. I think this is a fake out, so I necessarily don't want to take this out. I can also do it here on the 3-minute. Here we see. So now we got the Fabulous 4 box ready, and what we need to do is that as soon as price basically leaves this box, we will be ready in this case to short. But my point is that even though this is a trap zone, a signal of 4 candles underneath both moving averages actually gives you the signal to go short. So you can actually go short after the 4th candle and you see the green bar gets taken out. That's right here, because then you have a very short stop, which is of course up here. In case you want to be more certain about it, which you can never be, but in case you want more certainty to it, you can short as soon as the price leaves the box and then put the stop on top of this bar that actually leaves it. Or you can even wait until 1 minute and 40 seconds passes of this red bar and then go short and put the stop over here. But now you're getting a much longer stop than necessary. You can also see the same thing here on the 3-minute chart. Even though we are inside the box, the so-called trap zone, you have the possibility to put the short straight after the color change underneath the 20 moving average. With the stop, I will place the stop right over here. Also, you can say, well, I will short after this red bar is finished, because this is clearly an elephant bar which is closing outside the Fabulous 4 box and it's originating straight from the 20 moving average. So I know that you could say, well, this is a quite long stop. It is a long stop, it's 37 points. But if you have entered the short at this time, you would have gained so far 173 points. So that's a very nice risk to reward ratio. Number 2, when you have actually these two 2-minute and 3-minute charts next to each other, you can on both of them, but especially on the 3-minute, you can see that there's a lot of air in between the price and the 20 moving average. And as long as there's good air in between the moving average and the price, that means that the trend is going to continue. So now the remaining question will be, when do I actually add a short to this? In this case, if you add shorts whenever you have a color change, you would get stopped out. But there's a way around this, because what you can do is you can say, as soon as the biggest green bar gets taken out on the body, which is here, right there, I put my stop on top of the bar that I enter and then follow the rest of the way. Again, here you have a green bar down here, which is relatively long. As soon as this one gets taken out, the stop underneath and down. And again, you have one relatively long green bar here. You can see it's relatively long if you include also the spike on the top. So as soon as that one gets taken out, which will be there on this bar, this green bar that actually goes down, you put the stop over here. So in this case, you have actually the possibility to add your trades. If this is a not so good stop technique for you, you can also do a stop technique where you count back 4 or 5 bars, or the simple way would just be to move your stop to the largest red candle all the way down. So to make sure that you follow the largest red candle all the way down. So in this case, our stop, if we, let's say we shorted from up here from the top, your stop would right now be down here on top of the largest red candle. So now you would actually have a profit of 143 points, but originally you had a risk of about 40 points. So that's not that bad. I hope you like this content. Click subscribe and click like if you like this video and it brings good value to you. See you in the next video. Bye.